Welcome to the PFP podcast from the Personal Finance Society, a place for thought-provoking discussion from the world of financial planning and beyond. In today's podcast, we hear from members of the Society of Mortgage Professionals Board on what they think are the key topics shaping the future of the mortgage profession. Taken from a recent webinar, Board Chair Liz Syms is joined by Dave Coleman, Hannie Mason, and Simon Coward. Let's join the conversation with Liz, David, Hannie, and Simon.
Welcome to today's S&P Q&A session. My name is Liz Syms. I'm the chair of the S&P board, and today's session I have some fantastic guest speakers who's going to talk about the trends and challenges in the mortgage market for advisors. So I'm going to let them introduce themselves. So Dave, would you like to go first?
Yeah, thank you very much. Delighted to be here. So my name is David Coleman. I'm head of sales at Positive Lending. Positive Lending are a master broker supporting the intermediary market with specialist lending solutions across a multi-product range.
Fantastic. Simon, welcome.
Thank you, Liz. Good morning, everyone. So I'm Simon Coward. I'm the regional manager for Halifax Intermediaries in London and the South East, where I'm responsible for a team of 9 field-based BDMs. In addition to that, I also have responsibility for our Halifax Premier Large Loans Relationship Management team.
Fantastic. Hannie, welcome.
Thank you. Thanks for having me. I'm Hannie Mason and I run a brokerage in Silsden, West Yorkshire. Mortgages with Hannie & Co. We're a fabulous team of 6, but a small independent firm that are growing every day. So yes, thankful to be here. Thank you.
And also the newest addition to the Society of Mortgage Professionals Board.
Yes, very exciting.
Yeah, looking forward to your contributions. So I'm going to start with a really, really broad question. And I'm going to come to Simon first, if I may. So Simon, this is a big question. What do you see as the biggest challenge currently facing mortgage advisors in the UK market?
Thanks, Liz. Yeah, and it is a big question. And, you know, there are a number of challenges clearly that individuals and businesses are facing in the current industry. So I'd probably come on to talk a bit about some of the volatility that we've experienced and the pace of change. So it feels like certainly in the last few years in particular, the pace of change right across our industry. Someone's just hit the accelerator pedal, and you know that rapid evolution of the day-to-day environment that we're all operating in has just, as I say, it's really taken off. So, notwithstanding some of the tech changes that are happening, I think just the volatility that we've experienced in respect of pricing over the last few years. And we occasionally get some of these shocks to the system, where, the global economic outlook creates shocks to, the funding lines and the cost of funds from a borrower perspective. And it's all proving, a real challenge for advisors to manage on a day-to-day basis to keep on top of that. Consumers are really, I suppose, because of the impact of much higher interest rates than they've been used to, they're really quick to read in the press that interest rates have changed or they're going up. So I think that pipeline management in particular has grown and grown and has just become another part of the role and a big part of the role that probably didn't exist before. And that's in addition to everything else that's been changing. So that's probably where I would sit on that one.
And Hannie, you're nodding quite a lot there. You're agreeing with Simon, I believe.
Yeah. Absolutely. Yeah, I definitely second the biggest challenge has been that volatility. It's definitely creating uncertainty for clients, and it's, requiring us as advisors to be both educators and emotional support in a way. So yeah, definitely, that the clients are looking for that clarity in chaos, and it's on us to help kind of make peace with imperfection, you could say, and I think for them, the perfect time rarely announces itself. So we've got to kind of step up as that calm, credible guide. Affordability constraints, I would say I'd like to add into that being the challenges, tight criteria and, inflation stress testing, that's definitely making it more difficult. And it's creating a bit of client hesitancy, I would say. So people are delaying decisions. waiting for a better rate that might come out or something to change. So
with a lack of confidence in the market.
This is it. So I would say, especially from an advisor perspective, they're the main challenges we see. It's a bit of a knock-on effect. And yeah, we regularly refer to ourselves now as educators and emotional support advisors as well as just advisors.
And Dave, obviously, more and more of our customers are having their own complexities in terms of income, in terms of affordability and so on. Do you think the specialist advisors, there is a challenge there for them around the kind of knowledge of specialist products available that could help their customers?
Yeah, absolutely. Well, I think Hannie probably tell me better than this, but there's no such thing as a straightforward case, right? There's no vanilla client now. Even the straightforward cases are not straightforward. Income is more complex. Borrowing is more complex. Credit profiles are more complex. And as that continues to change, grow in the market, there'll be more need for specialist products to come into the market. And I think brokers at the moment, potentially struggling to stay up with what's changing in the mainstream world because that changes so fluidly. But now there's more need for specialist products as well coming in. So they've got to be on top of that to understand it. But I think that's where the likes of what we do, we can come into that because we can share that education piece with brokers and let them know that there are alternative solutions should they need to explore that where traditional or mainstream borrowing isn't possible.
And you've done some great actual webinars for advisors of the Society of Professionals, haven't you, recently, in terms of specialist lending? Yeah, so check that out if you haven't done already. So what, Simon, do you see any trends in client behaviour from a lender perspective or client expectations? And, how should advisors sort of approach that?
It's certainly in terms of expectations. I think that clients and customers are becoming. There's a lot of information that's available to everyone at the touch of a button. So in the digital world. So I think that people are using AI tools a little bit more ahead of doing any. Speaking with a mortgage advisor, I think they're undertaking some of their own research to understand a little bit more about the market and a bit about the industry and about what might be suitable for themselves before they then engage with a mortgage intermediary and also with a lender. So I think that in general, people are much more wary given I suppose, the high profile nature that the cost of mortgages has had within not just the trade press, but obviously in the national press over the last couple of years. So I think people are much more aware of, the budget constraints that they're undertaking their own research, and then subsequently speaking to, a mortgage professional, whether that be an intermediary or coming direct to lenders, etc. So I think that they having more of an idea in some instances. In other instances, from a first-time buyer, I think the amount of information that's out there and available to them can sometimes just be overwhelming. And what they're looking for, and Hannah alluded to it earlier on, is actually being an educator and that provide emotional support, because the first-time buyer population in particular, they're really needing some reassurance that they're doing the right thing, that they're thinking about buying, and they just want someone to really just hold their hand throughout that entire process because it's not something that they've lived and breathed before. So yeah, I think expectations generally are higher of both lender and of the intermediary community.
So just picking up on that AI point that you just mentioned there, Simon, are you seeing any particular tools that those buyers are using, or have you developed your own chatbots or something that are engaging directly with customers? Tell me a bit more about what you're seeing there.
So at the moment, I think predominantly there's a few generic AI tools that are out there in the market. I think from a consumer perspective, are using more widely. And, I'll think about my children themselves. They don't necessarily use a Google search engine anymore. They use ChatGPT everything.
Yeah.
Which, it's just, and I've, trialed various bits and pieces, on ChatGPT through Lloyds Banking Group. We have the opportunity to use an AI platform as well through Microsoft. So yeah, we're certainly seeing that that trend growing, and certainly for future generations will grow massively. In terms of what we're using at the bank, Lloyds Banking Group are massively invested in AI and technology going forward. We want to very much be leaders in that technological and digital growth that we anticipate will happen right across a number of industries. So, yeah, I think we'll definitely be playing our part on the AI piece. As for what the plans are, it's probably going to be not my call to make as to how that's going to progress in the fullness of time. But you can certainly see, I can certainly see a future where things like chatbots will be implemented across the industry, because it's able to provide that instant, convenient response at a time that suits the customer to be able to manage it, digitally in that kind of way. So, yeah, I think there'll certainly be a massive amount of progression in that in the years to come.
Sure. And Dave, what about yourself? What are you seeing in relation to kind of the growing use of technology and AI in the advice process? And do you think it's an opportunity or a threat, or perhaps both to the advisors?
I mean, long term, it could be a threat. Immediately, I don't think it is a threat. I think it's more of an addition to streamline and make things a better process for everyone involved. And if adapted correctly, it can help speed up application times and the process and how we communicate. And I don't think we can shy away from that. I think if you're not embracing it, you're probably going to get left behind. What it looks like for the future, who knows? Sarah Connor might be sitting somewhere shaking her head and going, "What the hell are you all doing?" But we don't know. But inevitably, it's growing, and as much as AI is doing some great things at the moment, it really is still learning. It's still growing. We're a long way away, I think, from AI being how to deliver advice on mortgage products or financial services and things like that. But inevitably, as it does grow and continues, then it will come into our business every day, I think.
Hannie, are you using AI, or do you see any opportunities for AI in your business?
Absolutely. I think there's a lot of opportunity. It's time saving, the automation of admin tasks for us, better client experiences from a kind of a slicker onboarding point of view and communications, enhanced data insights for us. There's lots of we're using it from a reporting perspective and looking at kind of what's happening. So
how are you doing that? So in terms of the reporting, what tools are you using for that?
So we very much like ChatGPT, and so we put a lot of our data into that, and that's fantastic from a kind of summarising trends. So it's data we already have through other software, but we're just utilising tools like ChatGPT to analyse things. It's not just ask it a question and it responds. It does so much more than that. And so even just something like that it's been fantastic for our business. But I'm very much, we love AI and we love tech, and I very much say that's just the toolkit. It's not the advice that, it should speed things up, but not strictly so out of the advice process. And I'd say the future is still human first, just tech supported, not the other way around. So yeah, we love AI and technology in our firm, but we still, the advice side of it and the personalisation is still at the front of everything we do. It's just supporting that.
It's augmenting the human, isn't it, with that tech? And just on terms of ChatGPT, just for those who are kind of trialing it out there, but we do the same within our business. It's important if people are using that free account and they're putting proprietary data into it. There is a particular area in the settings where they can turn off the training for the model, isn't there? We'll just make that point for everybody listening. But otherwise, when you've done that, explore and get curious. It's brilliant. Go on, Dave, you want to add?
And I think just to add sort of what I think Simon alluded to when he answered that is what we're seeing now, and we're reactive to this because we get introduced business from mortgage professionals in the market. What we're seeing now is the consumer is now searching more. They know what a bridging loan is. They know what a second charge is, whereas before that would have been completely alien to them. And now they're using this software and this technology to actually do a bit of research of their own, to understand a bit more about it. And then they're going to their mortgage professional financial advisor to get some specific advice and direction on what they can do.
So the opportunity there as well then is better qualified customers coming to see us as well, isn't it?
Yeah, absolutely.
Absolutely. Good stuff. Okay. So Hannie, I know you've been doing quite a lot to support new entrants in the mortgage profession. So do you have any specific advice for people that want to become mortgage advisors for the first time? Perhaps those who've started in the environment and find it difficult to build their first pipeline. What sort of advice would you give them?
Ooh, yes, good one. For new entrants, for me, my biggest one was kind of not just waiting for for business. You know, the phone doesn't just ring. You know, they don't kind of land in your email inbox. So when I first came into the industry and kind of building my pipeline to start with, I very much relied on social media. So social media was huge for me when I set up, and we do very well. I think it was more, not before it was a thing. Obviously, social media has been around for a long time, but there's definitely a lot less from a mortgage. You know, you didn't see mortgage brokers and financial advisors on there every day. So yeah, I'd say don't kind of just wait for leads. You know, we built trust-based visibility, you could say, across social media platforms, and that really helped us. We offered, you know, free value from an educational point of view. You know, we did webinars, we did myth-busting content, we did budgeting tips. We kind of offered that educational side to customers before they'd even spoken to us, to give it, you know, kind of help the understanding before they'd spoken to us. And that's kind of how we win our business. People follow us online for a year before they're even ready to buy the first house or take action for something. And then they come to us, and it's always, I've been following you online for a year, 2 years, even if there's nothing in. They watch you for a long time. So that's why we do a lot of education online, because we know people that are not quite ready right now are following, and they are listening, and they're trying to understand things for when they are ready. So yeah, I like to say, I always tell my advisors, you know, to be relentlessly helpful. But our pipeline follows our presence, really. Don't wait to be known, show up, add value, and speak in your own voice. But I think that's one of the biggest things that made us stand out to start with. You know, I'd speak to people, and they didn't think I was a financial advisor in the profession, because I was just so normal and there was no jargon. Not that financial advisors are not normal, but you know, normal conversation, and a lot of the feedback we get speaking to your friend about a mortgage, there just happens to be an advice element within that. So it's a lot easier. You know, people listen to that and then they refer their friends, and that's how we've grown as a business. You know, we've tried to add value. The win in the business has just been a bonus.
And Dave, we've obviously got quite a strong presence online as well, and social media. I mean, do you echo what Hannie said there?
Yeah, absolutely. I think that I take a very different approach on social media, but my job is built on relationships, getting to know people, building relationships. So what I do, I have the icebreaker, but to echo what Hannie said there, is put yourself out there. Let your name be known, let your face be known, you know, talk about what you're doing, and whatever else, so that people recognize who you are, and it's not alien to them. And inevitably, you know, what I gain off the back of LinkedIn from posting something absolutely random is someone drops into my DMs and says, do you know what, I've actually got this scenario. Can you talk to me about it? Because what you've just posted resonates with whatever it's about. But it's that human factor, isn't it? We're not robots. We are human. We're normal people, even as financial advisors. So we are normal, and you know, people by people. I know that's the old adage of cheesy saying, but it is true. And if you put yourself out there, they will come. So yeah, that's it.
And Simon, do you have any other views on that, or you know, is LBG doing anything to support new people into the mortgage industry?
So I know that a number of colleagues from across our intermediary teams have been working with the likes of the Society of Mortgage Professionals and other trade bodies to help, you know, new recruits into the industry, because this is a fantastic industry to work in. And, you know, I think of my career, I've been working in the mortgage world for 28 years now. And I think when I first started, I didn't necessarily see that this was going to be a lifelong career passion of mine when I first started out at a bank, you know, in my very early 20s. but over time, I suppose you kind of get to realize that actually, I really love this industry. I feel that we're able to make a difference. We can support customers through, let's face it, the biggest purchase in their lives. And it's a fantastic thing to be a part of, to be able to make that kind of difference to someone's, in a family's life, and help them secure a home or help them refinance their home, etc. So it is an incredibly rewarding thing to do. I certainly think that any new to any industry, that it's tough, right? It's tough. Doesn't matter what line of work you're working in. I think it's all tough. It's a steep learning curve, and in particular in ours, I suppose, where there's the added pressure of, there is, that prize of someone being in their home creates that additional pressures that we're all going to put on ourselves. I think we at the group, we encourage people to get mentors. I think that's another really valid point that I'd echo and would be valid right across the mortgage industry. So someone new to industry, find a mentor, whether that be inside mortgages or outside. Have a lot of engagement with other mortgage advisors. And be the sponge to soak up and gain from other people's experiences, because that's really how you learn your trade, isn't it? That's you want to try and learn from how other people have managed certain situations, how they have dealt with different encounters. And only by doing that, and other people on this panel today have said, by putting yourself out there, that's what you've got to do, is put yourself out there, but throw yourself into it, build a network of contacts that you can call upon for some help and for some guidance, and a mentor, whether that be in the industry or outside of the industry, to help you with your business, maybe your strategic thinking and your 3, 5 year plans, etc. Or perhaps help put things in a bit more perspective for the immediate term.
I echo exactly that. I mean, every appointment that I attend, webinar I do, whatever else, if it's with an audience, my objective is to learn something from that. So if I'm sitting in front of a traditional professional mortgage broker, and I'm sitting in there talking to about my world of specialist lending, I want to take away something from that meeting. And typically I will do. They won't know they've taught me something, but I will get something from that. And also it's about collaboration, not competition. Are we all in competition? We probably all are to some degree, whether you're a lender or a broker, packager, whatever it is. But actually, as Simon just said, if you surround yourself with the right people and you're all learning, you're all growing, our objective is to service the market. And the more we learn, the more we grow, the more we can do that.
Yeah, absolutely. And I also echo the point around mentorship. I think that's actually, a fantastic option. There's lots of ways that people can get mentorship and really help develop, strategically help them grow. So just moving on to another subject, which I think is quite an important one, is around protection conversations. So, it's great when we're giving mortgage advice, because the customer at the end of the day, they want their home. They're very engaged with that advice. When it comes to protection, it's a different skill, isn't it? So, how important is it to have those protection conversations, and how can advisors get more confident in doing that? Perhaps start with you, Hannie, on that one.
Yeah, I mean, in terms of how important it is, I mean, it's core advice. It's not a bolt-on. It's essential. You're not just helping them get the keys, but you're helping them stay in the home. Yeah. So yeah, it's very, very important. It is difficult to, I mean, there is this perception of insurance, and it's always a what if, and I think that does make it difficult for clients to understand. But in terms of, it is just how you help them understand. So that's how you've got to you frame it as that what if safety net, and not kind of fear them. We do it by way of storytelling. So, and I think it does sometimes make it easier when you've had an experience, or someone with an experience, which it's more common than people think. So most people are able to give a real life example or do some form of storytelling. And I think those real life examples help the most. You could look at the stats as much we can and show clients the stats as much as we want, but they're not bothered about the stats. It's all tools that are available to us, and we know the stats and we know, the chances of things. And yes, that just adds the importance to why we need to be encouraging it. But it is more, clients understand it more with real life examples and storytelling. And I think if advisors are not doing that, then they need to, even if they don't know anyone that's experienced anything, or there's a lot of providers offer a lot of support. They give stories, and and you can give those as examples. I think that helps customers just understand it a little bit more. And you've got to make it more about life planning, not just product selling. And that's the difference. And I think that's where some advisors will struggle when they are going down, they're trying to sell this route. They need to be building trust, that making it form part of the process. We always use cars and phones as an example. You wouldn't insure the car and leave the driver, all that kind of stuff. And that just helps them see it from a different perspective. Why could the house and not the people in it? It's just using examples like that that'll simple things like that'll just help your customers see the importance of it a little bit more. Frame it as part of the client's plan, not just a scary, well, what if this happens? And it'll just become a natural part of your advice process, and it's good advice. And not everyone's, I think one thing for us is not everyone is going to want it, and that's fine, as long as you have, you're not trying to sell a product, you're trying to help your customer understand the importance of it, and not everyone's going to want it. And I think for me as a new advisor, because my background has been with a mortgage lender, so it's always been mortgages. I never saw the protection side until I came into advice, so that was very difficult for me to then see that side of it, to not be kind of set back if someone doesn't want it, because that's fine, as long as you've done your part and you've explained the importance of it and tried to factor it into their plan. Not everyone's going to want it, and don't let that kind of hold you back from demonstrating it to that you have to buy it.
Yeah, it's about having those conversations, isn't it? And I think from a consumer GPT perspective, that's all we're expected to do, is to make sure we've had those conversations. And how are the team doing that at Positive Day?
It's not so much, we don't come into that so much. We do a little bit, but I think Hannie's just hit the nail on the head there. It's about the storytelling and making that relative to the client's situation. I think when you're selling someone a product to acquire something, property, whatever else is tangible, they don't necessarily see the value in spending this money out, because what am I getting for it? But then when you put that into relation to, this is how we've helped other people in the past, and this is what's happened to them, all of a sudden they go, oh my God, yeah, that happened to auntie so-and-so, or my friend, or whatever it is. And then they start to sit up and listen, because actually they understand the value of what's been presented to them. And that's how he said, look, that not everyone is going to take it. Some people go on holiday and take insurance. So, you get those people out there. You can lead the horse to water as such, but that is what it is. But I think, as you said, look, the conversators, as long as we're having those conversations and pointing people in the right direction, that is all we can do to a degree. But putting the story element around it really helps that the value of what's being talked about resonate with the client.
And someone at LBG, in the wake of consumer duty, what are you doing to help advisors kind of meet their requirements under that, or to monitor from your own perspective that advisors are meeting those requirements? For example, things like fair value and things like that. Are you doing any of that at the bank?
Yeah, absolutely. So we have obviously the fair value statements that are all on our published websites, the intermediary websites, etc., that are available for intermediaries to obtain and pass on to customers where appropriate. And through the direct channels as well. You'll all know that Scottish Widows obviously is part of Lloyds Banking Group. So we have our own life assurance provider, which obviously the direct channels will use from insurance sales, etc. So obviously there's a number of pieces there in that consumer duty. I'll probably add another layer onto that in respect of vulnerable customers. So we have, set processes in place for both direct and for intermediated customers, for brokers to be able to tell us about customer vulnerability. So, at completion, with the customer's consent, they can let us know, is there a language difficulty? Is it a hearing difficulty? From whatever that vulnerability may be. And I suppose here's going to be a plug, is that I think that the intermediary market is doing a great job of identifying customer vulnerability. But I think there is a gap missing between actually the intermediary firm being able to then tailor their conversations based on that customer vulnerability and be able to help look after that customer. I think the gap then is, okay, are you actually telling the provider of that same vulnerability? Because, if the in this case, as a mortgage lender, are going to have that long-term relationship with that customer, we probably would benefit from knowing that same information so that we too can make sure that we engage with the customer in exactly the right way and provide the relevant, care and attention that is needed for that individual set of circumstances. So also a number of things that are there, but that's definitely one that I think we could help bridge that gap so that the intermediary world is doing a brilliant job of identifying it and providing their treatment based on that. I think the next step is tell the lender so we can replicate that, because we want to do that as well. We want to do the right thing for customers.
Absolutely. Just for me to add to that, because I've done a little bit of work with one lender who's been researching this exact thing at the minute, and part of some of the help we provided with the research was not one single lender asks us for vulnerability details other than your typical hearing, print, do they want any special print requirements? It just seems to be those two options, how they get the documents, and that's it. There's no encouragement from lenders we see. And it's not that, advisors are holding back from providing that information, but we don't know at what stage, do you want this information? There's nothing, when we're doing applications, all most lenders ask us is how they want the documents. Do they want braille in large text? And that's it. There's no,
not a great process in place, Hannie, in terms of sharing that information with lenders. How is it, Simon? Do you know?
Yes. So, I mean, from our perspective at Halifax, so it is interesting what Hannie said there, because you're absolutely correct. Because actually, until that mortgage completes, there might not be a customer as such. So there is some complexities with regards to at what stage. So we as a lender, we ask for the mortgage intermediary, as long as they have obviously the customer's explicit consent, that they can contact us. We've got a designated phone number and a team of people at completion to tell us, okay, what are the circumstances? What do we need to record on our side so that we can tailor that future contact approach with the customers? And as Annie said, that could be a whole range of things. And we see a personalized approach to that customer and their needs. But we need to know about that to start with. But I suppose it feels a little bit of a manual process, because it's not something that is recorded online at application stage. And so I suppose from that sense, it's almost like having that mortgage is now completing. Right now, I need to let the lender know of that. And anything which requires, I suppose, that manual intervention is always going to be subject to human error.
Of course. Okay, I'm just mindful of the time. So I think what I'll do is sort of ask you one more really deep question. Okay. What is the one thing you now know that you'd wish you'd known earlier in your career as a mortgage professional? Dave, do you want to kick us off with that one?
Oh, there's so many. I mean, every day's a school day. Every time I think I've got up to speed with everything we do, I get schooled and realise I'm not. So something comes out of the woodwork. Broker phones me with a scenario I've never, ever been presented before. I would say, personally, if I was talking to my younger self, listen, stop talking, listen, learn. Because sometimes you can be very keen to get going, do this, do whatever else. But actually, if you listen to what you're being told, absorb that, take it with you, you'll go a lot further than talking and trying to do that. And effectively, we're not just order takers. We're here to understand the clients. It's all been said on here. Yeah, we're emotional support. We're helping people aspire to get their dream property or whatever their situation is. So if we listen, understand who they are, what they want, what they need, what the problem is, or what the situation is, we're going to be much better equipped to help those individuals. So that's probably what I would say to myself.
Amazing. Thank you. What about yourself, Simon?
So I came into this industry, as I said, many years ago now, mainly because I felt I was good with numbers, and I quite like the idea of working at a bank. And whilst we, have a huge amount to do with finances and numbers and data and spotting trends, etc., I'll bring it all back to actually this is a really people orientated industry where everyone is working collaboratively to try and help benefit the end customer. And so, it's completely flipped on its head in the time that perhaps I perceived the working for a mortgage lender would be. Actually, it's about people. It's about educating, in my world in particular, helping educate the mortgage intermediary market so that they in turn can help provide really good outcomes for customers. So I think education and people are probably the two key things that I really take away from the industry.
Amazing, thank you. And final word to yourself, Hannie.
Yeah, and I've got two parts. So from a client point of view, what I didn't realise is when I first came into it, is it's not just about being right. It's about making the clients feel right in their decision. I think that connection and clarity with them and consistency, I think that matters more than the cleverest rate sourcing. I think that's really important. And one thing I didn't really realise when I came into mortgage advice. And then the other thing for me is my broker network. The brokers that I have around me outside of my firm are the best support network that ever. Speak to other mortgage advisors. We all want to help each other. There's enough business for everyone. And that's the best support network I've got is other mortgage brokers. And I think when I first set up that, why would I work with another mortgage broker? That's my competition. And then actually, it's the best, I'm in a fantastic broker support network, and most mortgage brokers you speak to are willing to help. So please reach out to other mortgage brokers because they do want to help you. And I did not know that when I first set up. And I'm glad I do now because, it's helped me many times. So, yeah.
Fantastic. That was great, guys. Lots of really, really interesting stuff for everybody there. So thank you to everybody who was listening. I hope you found that as interesting and fascinating as I did. If you would like any further information from any of our speakers, the details of them will be available after this session. So thanks very much again to all of our speakers, and thank you for listening.
Thank you for listening to this episode of the PFP podcast. You can find useful links in the show notes and related articles on the Personal Finance Professional website, along with further podcasts. Please always remember to like, review, and subscribe. And until next time, goodbye.